Hello, everyone. Thank you so much for joining us for the Women in Investing panel. We're super excited to get Sonia and Cristin here today to answer some questions and also introduce you a little bit more into investing. To get started, we have a little bit of a short workshop that On Deck is going to be sharing about investing and how to get started, and then we'll jump into the panel. So I'll pass it off to Andrew.
Awesome, thank you, Michelle. Can everyone see my screen? Amazing. We're gonna hope that I don't have technical difficulties with this, but almost every time I present, something goes wrong with my screen share. So we'll see how it goes. But awesome. So I'm Andrew. I am the program manager for On Deck Angels. So I'm gonna share a quick overview of ODA, or the abbreviation for the program, a little bit about like what it is we do, how we support folks, and then talk briefly just around like a few reasons as to like why you might want to angel invest, how to get started, how something like ODA might be able to support you, and then hopefully we'll get through that pretty quickly and then get to the real meat of this, which is the panel. But so just jumping into what On Deck Angels is. So largely it's a community of operator angel investors, and we support folks through a combination of community, curriculum, and deal flow. So those are like the three main areas. I'd say that most people in the community are somewhere, so it's a kind of a collection of people. Most are still operating full time. So this is not, they're not investing full time. It's still something that they do on the side, though there is a small number of people that run funds now and do it in a more full-time capacity. Most are like product leaders at technology companies or startups. Some are executives, some are current founders and just angel investing on the side. So there's kind of a spectrum of people in our community. And I'd say that the common thread is that most are just really, really helpful to founders as well as to other investors. So, and that can look like a lot of things, but, and then the other thing is everyone in the community just has a very like give first spirit. So, and then in terms of experience, people have joined the community as early as like only having written a check or two, and then all the way as like someone running a fund or something like that. So there's a broad range of experience, but the thing that we really look for and the thing we're really excited about is just how helpful everyone in the community is. But like I mentioned the second before here, there's kind of like three key pillars by which we support people, and curriculum / education is one of those. So throughout the course of time in the program, we generally dive into a bunch of different topics that to help people get comfortable with the investing side of things. So portfolio strategy, evaluating opportunities, how to think about like what are like the bullet points that I'm going to be looking for in a company I may or may not invest in, how to think about getting into deals in the first place, especially some of the more competitive ones. Thinking about like launching a fund, launching a syndicate, something like that. And then more recently, we've been doing some deep dives into certain trends. So like as an example, like how to evaluate a crypto protocol versus investing into like a traditional like founding team. Something like emerging markets is one we've been talking about a lot more recently. So those tend to be a little more like a moment in time in terms of what's hot in the market. But generally, the goal is to help people get people comfortable with wherever they're at as an investor. So if you're relatively new, helping you think through like how big of a check size you're going to write each time you're investing, how many investments you're going to make per year or over whatever given period of time you're looking at, how you're looking at companies, et cetera. Thinking about your thesis, all that kind of stuff. Second big thing is deal flow. So, I mean, it's a big part of what is going to make anyone successful in investing. You need to be able to see a decent amount of opportunities. You need to be able to get access to those when those come through. So I think one of the big reasons people join something like On Deck Angels is the fact that there's a lot of founders and other programs in the On Deck network or ecosystem. So for those of you, I don't know how familiar everyone is here with On Deck, but we actually started as a community for founders, and we currently have probably somewhere between like 5 to 8 or so different programs serving founders. So, and that kind of spans a range of around like pre-seed all the way up to some founders like even at Series A now. But But the TLDR on that is there are a lot of founders in the community, and a lot of folks that join On Deck Angels are very excited about getting to meet those founders, the opportunity to invest in their early funding rounds, and in my opinion, is like one of the very, very clear pieces of value, simply because getting access to those opportunities before anybody else does can really differentiate you when you're trying to make investments and see top quartile companies. And then the last major pillar is really just the people around you. So these are a few folks that did recent cohorts, but at this point, there's close to like between 250 and 300 people in the community today. And there's just a lot of different people with different backgrounds that have done very cool things or doing cool things and have various amounts of experience on investing, but being around a community of your peers, of people that are investing, that are helpful, that are give first, and learning from them, investing with them, it's one of the biggest pieces of value of any community, but especially ODA, and something that we're really, really excited about. Who you surround yourself with really, really matters, and so that's kind of something that we try to focus really hard on, and making sure that we've got an incredible group every single time we bring in a new cohort. So kind of a couple of just quick things on why think about angel investing, because I know that I know we have kind of a mixture of folks here, so I'm not sure how many of you angel invest currently or how many of you are thinking about investing in the future. But I think a common thing that we hear a lot from a lot of operators that have great networks, they may have thought about angel investing, they may have friends that angel invest, but a lot of times people go, well, there's a little maybe imposter syndrome, or just questioning as to like if they're ready to angel invest or anything like that. So kind of just addressing a few of those things, I think it's really important to start with why you're going to angel invest. So obviously financial returns is a big part of it, but that's actually only one reason. People invest for all kinds of reasons. Networking, it's like social status, like it's a thing you can put in your Twitter bio or LinkedIn profile or whatever. Building a track record, which is especially relevant if you ever have ambitions of starting a fund or joining a venture firm or something like that. Like there's several people in ODA right now that got into venture because they started angel investing first. Learning, I think that if you one of the amazing things about investing in companies and founders is it just becomes like a mini deep dive into an industry or market or product that you would never have spent time learning about before, either just from your own time constraints or just where you spend your career. And giving back is another really, really big one. I think that a lot of people have benefited a lot from the entrepreneurial ecosystem and want to help other founders launch their companies, win, succeed. And then some people have like a very big focus on enabling some form of like human or societal progression. So one of our current members of the community only does climate tech deals because he's very passionate about trying to solve problems in that industry. And it's less about financial returns or just angel investing as it is specifically allowing founders solving problems in that area to succeed. A lot of different people can angel invest and can be successful with it. I think a common one we also tend to hear is maybe I don't have enough capital, or I wouldn't want to write like, $100,000 checks. And I think the reality is a lot of people get started with something as small as 1K, including some very, very well-known investors started like with really, really small check sizes, and people that now run funds or that are GPs at large venture firms. So I think it's important to remember that the check size doesn't have to be as meaningful or as large as you may think it needs to be. And then also too, that like what like is considered valuable. A lot of people think that, well, I actually couldn't help founders. Like, what expertise do I have to bring to the table? But I think a lot of people undershoot themselves, not realizing that there's a lot of different ways you can be helpful. And honestly, like small check investors from our experience have been some of the most helpful to founders in the On Deck network. So I think a lot of people, it's a lot easier to get started than you may think, and you probably have a lot more value to bring to the table than you may think. So. And then the last couple of things here, building blocks for success. I think that when we're talking to angel investors that are considering joining On Deck Angels or even just getting started in general, something we've been asked quite a bit is just like, what are the main things that will make me either successful or not successful? And obviously you have to have capital, you have to have some level of like dollars to invest. You need deal flow, you need access, strategy, and then a time horizon. And in reality, we're probably most positioned to help people with deal flow. We can help you see more deals than you're seeing now. We can help you get access to those deals. and we can help you figure out your strategy. So if anyone here in the audience is considering wanting to be around more investors, to get help with either getting more deal flow, figuring out what their thesis is, meeting other investors, that's an area that we can support you. I think that being a part of the right community can be a huge accelerant to anyone's investing journey or career. So want to just make it an open invitation for anyone that is interested in learning more. Feel free to reach out to me on like social media or even just to apply on our website. We're happy to chat with folks, even if it ends up not being a fit for wherever you're at. We're happy to be as helpful as we can. We want to pay it forward and help more people angel invest. We think it's a good thing for founders and for the entrepreneurial ecosystem, if that's the case. So, but with that, we're going to get into the panel here, and I'm going to pass it to Michelle to get us kicked off.
Awesome. Thanks so much, Andrew, for that intro. And hi, everyone. I'm Michelle. I realized I didn't even introduce myself. I'm the co-founder of FLIK. We're a platform and community hub that connects female founders and leaders with learners from across the world through meaningful apprenticeships. And it's been a huge passion of mine to elevate women in all aspects. And I've always wanted to become an angel investor in the future myself. So I'm really, really excited to be moderating this panel. I'm also on the longevity biotech team at OnDeck, which is how I also integrate with OnDeck. So super excited today to be introducing you to our amazing panelists. I'll let them introduce themselves. They'll do a better job than myself. So I will first bring up Anne. Anne, would you like to introduce yourself?
Yeah, sure. Thank you. It's so nice to be here with you all today. And thanks to the team for giving me the opportunity to be on the panel. My name is Anne Ferracane. And right now I am the founder of Patch Ventures, which I founded in 2019. And I would describe it as a private partnership to invest, advise, and incubate startups and innovations that go along with my thesis. So my thesis is that I like to focus on businesses that provide economic opportunity or reduce information asymmetries. So that could be like a data product. It could also be like a service marketplace of people chatting. So that's my thesis generally. My background briefly is that I spent the past 13 or so years working in tech or tech functions in growth, analytics, and product. And before starting this business, I spent 5 years working at Lyft. So I was an early Lyft employee working in analytics, growth, operations, and whatnot there in both San Francisco and New York. So now I spend my time advising and investing and consulting and hacking on my own projects. So the way I would describe myself as an investor is I'm considered a small check strategic investor. So we can talk about more of that later.
Yeah, I'd definitely like to later on dive a little bit more into how your operating experience has helped you become an angel investor. I think that would be very interesting. Sonia, would you like to go ahead and introduce yourself?
Sure. Good morning, everybody. I am Sonia Steinway. I've been doing angel investing for about 3 years, starting through syndicates and now more and more on my own as well. And it's so much fun and it's really gratifying for all the reasons that Andrew was talking about. I'm actually an attorney by training, but founded a fintech company and was CEO up until about a year ago. And now I'm doing consulting as well and a little bit of like very niche specific legal work with fintech companies. And then trying to do as much as I can with the entrepreneurial community in San Diego where I live.
Awesome. And Cristin?
Hi, everyone. I'm Cristin Pacifico. It's nice to be with you virtually. I'm actually dialed in from our TechNexus office today, and it feels good to be back in person with some of the team. So I work at an early stage investment fund based out of Chicago, and we work alongside a suite of corporate partners. So every investment that we make is financially motivated, but also strategically compelling. So we'll invest essentially to help foster collaboration between large corporates and early stage entrepreneurs. Happy to talk to you guys today about anything touching angel investing, but also more general investing. So I do work in venture right now, but have always been extremely excited about personal investing and thinking about saving and retirement. My first foray into finance was actually working and learning about mutual funds. I also have operating experience from my time working at Home Chef. I joined the team pretty early, meal kit delivery startup that actually scaled and grew and was ultimately acquired by Kroger, the grocer. And before that, spent some time in investment banking, mergers and acquisitions, and thinking about valuing larger companies. So a lot of kind of diverse investing experience. And I think the most important thing, especially as women, is just getting involved and starting somewhere. So happy to kind of continue talking a little bit more about different types of investment vehicles and thinking about portfolio construction and how to develop your own portfolio of investments.
Yeah, I actually want to start with you, Cristin, after you said that, because so many founders have reached out to me being like, how do I even start? And I think that's kind of the first thing that we should talk about, is the barrier to even getting your foot in the door, figuring out your first deal. So why don't you talk a little bit more about how your background or any events or factors in your life brought you to investing, and how you first broke that barrier to think, you know what, I can actually do my own personal investment, and then went into VC.
That's a great question. I mean, it's kind of like doing research with anything else. And I think the most important thing is just getting started. And I think a few tools and resources that I've used and have found to be really helpful. I'm actually going to reference my on-deck experience. I just participated in one of the fellowships. And when we were thinking about investments, we actually talked about logging and journaling those investment decisions. So basically tracking anything from what was compelling about the company, metrics that you found to be interesting so that you can track those moving forward, and also thinking about even your mental state or how you were feeling on the day that you wound up making the investment. Being able to keep an honest log and track that information is something that I think is very helpful when thinking about making an investment. And I think also sometimes it's easy to fall into this decision paralysis. And so I think sometimes logging, tracking information is a good way to kind of bring transparency to decision making. So having a written log is really important. And I think the second thing is just finding and building a community of people that you trust. I think, of course, you can invest alone, but I think being able to find people that you can bounce ideas off of and ask questions, I think that makes you kind of a better investor ultimately, because it's part of the diligence process as you're thinking about why you're making an investment. Utilize the resources around you. Find someone who is excited about crypto or is excited about real estate, who might know something about that industry that you might not know. And I think most people, ironically, I think do want to talk about investments. So I think building a community and keeping a log, those are probably the two pieces of advice that I would give. And just to get started, make that first investment, figure out how to open up a brokerage account or Coinbase, whatever that looks like, you know, kind of understand how to start making investments and go from there.
Awesome, thank you so much. I know a lot of people have follow-up questions with that, and we'll address those in the Q&A period. And like I said, I want to dive in a little bit more into, you started off at Lyft and you had a lot of operating experience. How did you go from becoming an operator and using that experience to become an angel investor? And how did you make your first step?
Yeah, so maybe slightly different than Cristin, you know, but still echoing a lot of what she's saying in terms of diligence. I would say, just taking a step back, you know, I didn't come from the finance world. So because I had spent, let's see, 4+ years in the San Francisco Bay Area, and then before that, you know, worked in tech functions, I started with network. So I think, like, the way I boil it down would be, I didn't like necessarily go seeking network. I was always thinking about, like, well, where are the companies that I most admire coming from? Which is, I'm not saying you have to move yourself to the Bay, but to me, it was important to like live in the Bay Area for some time of my life to understand what that ecosystem looked like and why it was thriving from a startup and investment perspective. And even though I moved back to New York, what I learned is that, and this is maybe my bias, is that while I think talent can come from anywhere, the co-location of people, whether digital or physical, of like ideas and pushback and putting smart people in a room really matters. So how that launched into investing and why I'm kind of making this transition is that because I felt really confident in my colleagues and peers for like over 6-7 years of my life, when they had investment opportunities, and I said, hey, I might be interested in investing, and I put that out there, I trusted initially their perception of the deal, and then I did my own diligence. So I think you don't necessarily have to find a formal community right away, but think about like who in your circles likes tech, likes startups, wants to understand. And to answer your question more specifically, Michelle, about my operating background, now that when I started thinking about deals and I was reviewing the very first few, a lot of what I was thinking about was, how would I have done this if I was like an operator for this? What questions should I be asking them that would concern me, would be flags in the operation, flags in the business model? And so that's really where I started, was as naturally as possible. And I can talk more about networks later, but just want to make sure I answered your question.
Yeah, I think it's interesting how you both kind of pulled from your background in different ways to become investors. Sonia, I would love to hear from you, because you said that you've been an angel investor for 3 years now. Kind of how did you get started, and how did you make those decisions as to who you were going to back first? And I'd love for you to also dive into how you're super passionate about elevating underrepresented founders.
Definitely. So we got into investing through the Tech Coast Angels San Diego, which is a huge angel group here. And when I say we, it's my wife, Angela, and I invest all our money together. And so we had actually, it was because we thought the stock market was going to go down, which didn't end up happening. So wrong investment thesis there, but we were sort of like, well, what could we do with our money to invest it for the long term? And we, it's also sort of dissatisfying to invest in the public market, right? Like Coca-Cola, Pepsi doesn't care that I'm an investor, right? They don't need my investment dollars. They don't notice that I'm there, right? I can't help make decisions. I can't help them make connections. So it felt sort of dissatisfying. Whereas with angel investing, as a founder, I understood how important founders are to building communities, right? You don't get thriving ecosystems unless you have founders who are passionate about their ideas, who are building out their companies and hiring people. And so it was a little bit of this, like, how can we invest in our San Diego community? We were relatively new here, and kind of champion ideas that we wanted to see. So we joined Tech Coast Angels because we knew nothing about investing. We're like, well, we should probably learn how to do it and also get deal flow. And so I actually strongly recommend that people join groups, and there are so many. So having joined TCA, we then joined Angels, which is for LGBT investors, member of Stella Angels, which is for female investors. And there's like virtually every city is going to have some kind of similar investing group, or you can find, I know somebody who's created a fund for attorneys that focus on like legal tech, right? I think in almost every place, I'm sure somebody's asking in the chat about one in New York. I'm sure there's angel groups in New York, or ones that are more specific to different interests. And they'll have different flavors, right? So TCA, you join and there's a loose guidance about how much you should invest each year, but it's pretty minimal. And they have a fund. So you can like buy a share of the fund, and then the fund will invest in a bunch of other different startups. So it really reduces that burden. So for me, it was like, look, I don't know what to look for in a company, right? I know as a founder, like some of the basic questions to ask. I know as an attorney, the like, oh my God, these people don't understand regulation and there's no way I'm investing in this company. But like just some of the, like the heuristics that people use, or how they think about companies, the questions they ask. This was all stuff we learned by watching other investors at Tech Coast Angels who have done this for many, many years. And I thought that was super valuable. And then to your other question, Michelle, so our thesis, or the only thing we will invest in, are founders from underrepresented communities. So women, people of color, LGBTQ+, disabled, which I think is a growing area of diversity within startups, being more open about mental and physical disabilities, that are doing something that I would consider good for the world. And we do that in a very broad sense. But to me, the beauty of being an angel investor is that like it's like voting with your money, right? Like I'm making a decision about the companies that I think should exist in the world. And so I get to put in money to things that I am passionate about and want to see, in addition to having a financial return. But I feel like I sort of keep in the back of my head that all of this money could be lost. And so I'm doing it less as like I think these are the next rocket ships, so that would be great, and more like these are the companies that I think should exist.
Amazing.
If I can just add, Michelle, because I know like there's a lot of like really specific technical things when you're looking for networks. Like a couple things that I think are helpful these are just very tactical. So number one, like get yourself on angel list, like angel.co. and build a profile and start looking at the syndicates. Like syndicates, for anyone that doesn't know that, are like groups of people who invest, and they allow you to invest a much smaller amount, maybe like $1,000 or $2,000 as opposed to, 10, 20, 30, 50. And so that's how one of the ways I started was by sitting on a Lyft alumni syndicate with a bunch of people that were former Lyft people and seeing the deal flow that came through there. And you don't have to invest in all of them. You can just literally watch the deal flow come through to like get comfortable. So that's the first thing. The second is, if you're much smaller check investor, like you're not accredited, and we don't have to dive into that. Like there are other ways, like as silly as I'm not necessarily, I don't have an opinion on Republic, republic.co, but I actually like sit on it and listen. Like some really amazing founders have said they're going to run some of their investment through Republic. So I've had to sign up, and sometimes I put $100 in something interesting just to put $100 in. So that's another way. And then the third thing that I would share is, if you truly like don't feel like you have found a network of people that you're impressed by, I will just tell you what I did before I like got into the tech world in San Francisco. I literally just started messaging people on LinkedIn who worked for companies I admired, and would be like, do you have 25 minutes to chat with me about what you do? And so think about that. Think about using your resources out there to find people that you can have one-on-ones, and ask them like, hey, are there any like angel networks that you'd recommend that are really great, that are looking for women or people that are underserved communities to join? So just three quick.
She also had WeFunder too. I think that's great, Anne. WeFunder is another one where I've been seeing an increasing number of founders, and usually the minimums are like very, very small. And that's such a great way to like sort of build that muscle of just writing the checks, especially if you can sort of afford to say like, okay, this is $1,000 that if I lose this, it's not the end of my world.
I love how you guys brought that up, because I was going to say, I think Arlen Hamilton raised her recent fund on Republic, right? And I don't know, she raised like $2.1 million, and people were putting in like $200 each. So that's a great way to get started as an angel investor. I totally forgot about that. Republic and WeFunder, you should definitely check it out. I think Front Funder too, if you're in Canada, you can also be a part of that, and you don't have to be an accredited investor in order to just put in $100 or like a couple $100 into something that you truly believe in.
The other one I'll mention is Lolita Taub, who's a local investor here in San Diego, runs a matching service. And so if you are also interested in like funding companies with underserved founders, she like curates a list, and you can specify like, I'm only interested in enterprise SaaS or something, and she'll send out once a week the list, and then you can talk to the founders. So it's like, that's another great way to get a bunch of deal flow, or just like,
and if you're a founder yourself, I think you can apply to be part of her list, and she'll just put you in as well. So yeah, I want to also dive in a little bit more into the technical aspects of it. I think Cristin touched on it at the end of when you were speaking about portfolio management. So I think we did promise we were going to talk a little bit about portfolio management. So would love for you to get started a little bit about, how did you start building your portfolio? What does it look like? What is your thesis? How do you even get started with that thought process? And if you all want to just like jump in and chat and make this conversational, would love that as well. I don't have to call on you. I think you all have something to say. So go ahead, Cristin, and you can all jump in.
Sure, that sounds great. I think, we've definitely talked a lot about angel investing. And for me, I feel like that's kind of one prong of diversification for a holistic portfolio. And I think what excites me about angel investing is the idea that you can really move the needle for the company that you're investing in. And so typically when I've made angel investments, it's been because I have a strong or close relationship with the founder, and I really believe in the mission or vision that they're building for that company, and feeling like I can get in early, I can hopefully help shape and accelerate that vision. But I actually think that that's an important thesis to carry across any investment you make. And I think when you're contemplating portfolio construction, you're investing in companies, which means that you are a part-time owner, or you have an ownership amount or allocation of that business. And so I think finding and investing in companies that excite you, that you want to follow, that you want to track and get to know, is extremely important. And so I think when I initially started investing, I opened a brokerage account and very heavily dominated in equities. And it's been really recently that I've started to add different types of alternative assets to that portfolio. And I think everyone has kind of a different idea of what risk exposure they feel comfortable with. And there are a lot of really great articles and just resources out there that you can read about to think about portfolio composition. And I think especially as you're kind of younger, we can tolerate a lot more exposure to risk. Risk tolerance is much greater at kind of that beginning part of the curve. So thinking about exposure to equities, thinking about exposures to alternatives, if you can get into something like that, I think is really important. So I think that's, at least initially, as I started building a brokerage account outside of retirement or savings, I think that's really important. And at least for me, I kind of think about that as a separate vehicle. On top of that, I was saving and putting money then into equities, into companies that really excited me that I wanted to track. And then from there, I kind of layered in more diversification of different types of assets and investment classes. And so that's kind of how I think about portfolio construction and exposure. And I do think fundamentally, if you're going to be spending your time managing and looking at your portfolio, investing in companies that excite you is probably the most important thing that you can do, because it will keep you engaged. And I don't know, that's probably what I would share about that.
Do either of you want to jump in on that?
Sure, I'll just quickly repeat my investment thesis, which is that I'm primarily working to invest in products that improve economic opportunity. So I really love businesses that help put people to work. And then separately, businesses that reduce information asymmetry, which would be like making the exchange of information easier or freer or more organized, so that there's not, my thesis in the world is that the reason why there are haves and have-nots is literally because of information asymmetry. There's people with information and people without information, and people with various degrees in between. So the more we can share that is, it's my own personal story. I didn't grow up around people or a lot of money. And so for me, it was like all about navigating, what do you know? And interesting, how did you learn that? So that's my first thing. Again, if I were to quickly state some portfolio things, I really wouldn't, I am a little bit, I can tolerate some risk. But I still am not going to put more than 15 to 20% of my entire portfolio into this category. This is like my riskier category. So that's something. As a small check investor, I either do 30 deals at 2 to 5K a year, or 20 to 30 deals, or 10 to 15 deals of larger chunks, right? 10 to 15. And so those are some benchmarks I heard. I'm not necessarily going to say that's gold rule, but that's how I think about it. And the other thing that I was going to note about thinking about deals and how we think about investing is the biggest thing that I've learned that I thought would be most useful to share is that the network really does matter. So, as I mentioned, I know we're kind of one of our hosts here is On Deck. I'm in On Deck as a founder and also On Deck as an angel. And I did it as a founder first, and I was meeting all these fantastic founders. And the biggest thing I learned about evaluating founders is we live in a world where you can build a proof of concept. So to raise money without a proof of concept, you really have to be a business that needs hundreds of millions of dollars in my mind to start your proof of concept, and a really strong team. So if you're investing, it's important to think about what that founder has been able to do with limited to no funding first, and how they've thought through it, because that's a sign of, I think, grit. And so it's just something to think about in terms of, that's how I think about investing as well.
Yeah, when I think about diversification, I think across my portfolio. So how much do I have in equity? How much do I have in angel platform, real estate, whatever. But then I also think within my angel portfolio, stage, right? So we've invested in absolute pre-seed, there's very little there, right? It's an idea, it's a concept, and I just think it's cool, to something that's a series C. I think that sort of diversification comes more from being part of syndicates, because I think for the most part, something that's like a Series B, C, D is only going to come through more established channels. And so like, for example, Angels will have sort of later stage deals. Tech Coast Angels tends to have more around the like bridge to an A round. And then once I started angel investing and kind of like, you know, put it on my LinkedIn profile, all of a sudden I started getting inundated with people like pitching ideas or connecting me to somebody. And those do tend to be a little bit earlier stage. And so what's been really nice is trying to get across that portfolio, because I think of the pre-seed as obviously much, much riskier than something that's like a household name later stage. I would expect my returns to be lower, right? So like that may be a 2x return, which is still cool, as opposed to like a pre-seed where there's a 90% chance of failure, but if it succeeds, like I'm going to be part of that major upside, right? The thing I really like about Tech Coast Angels, not to always talk about that one, but like there's this fund where we bought the share and they're investing in 25 deals a year, right? Those are typically deals that I wouldn't necessarily invest in individually. Like there's plenty of white male founders doing enterprise SaaS. That's like not exciting for the world, but it does create that diversification by itself. And so I think that in terms of like balancing my portfolio or thinking about my portfolio, like that's a little bit less at risk than like giving, you know, $5,000 to a deal that's just like, whoa, this is such a cool idea, but you know, they've only got a proof of concept and they've got a long way to go before they'll ever make money. Like that's money I think to Kristin's point, like we're young enough that if that pays off in 10 years, like awesome, I'll send my son to college, but you know, I'm not counting on it.
Okay, awesome. Thanks for sharing about that. I would love to, for my last question, just do you have any other resources that you'd like to share with the audience before we get into Q&A? So if you do have Q&A, please drop in the chat or be ready to raise your hand and we'll bring you on stage. But do you have any other resources? I know we talked about Tech Coast Angels a lot and we talked about On Deck. Are there other resources you'd like to share with everybody and any other pertinent advice that you would give to anyone trying to get into angel investing or just starting with angel investing? We'll start with Anne.
I think again for the resources, then I'll just reemphasize that the networks are very useful. And I would say like if you don't have any operations background, then partly you might want to try to find some networks, like even sit on. I really love the Y Combinator podcast, how to start a business, how to build a business, because it gives like, you know, it's stories about like how founders are actually thinking about building. So if you have no experience building, I think learning from like websites about people who are hacking on projects like indie hackers and things like that are really good ways to understand how founders are sort of getting things off the ground and how crazy that process can be. And then my second recommendation is, you know, I don't want to presume everyone's background, but everyone here I'm sure has value to add in some capacity. And so one thing to think about is if you are a small check investor, then you really want to think of yourself as a strategic investor in some way and be able to show, like tell people your narrative of what you can help with. So the people who are letting me in on their rounds are usually letting me in because I will help advise as well in some capacity, not because I'm going to fund the entirety of their round, you know, with a couple $1,000s. So something to think about is learn your narrative of what you can offer to the founders. It's just as important to them to have great people on their cap table, like great people in their investments. So that's my recommendation.
Awesome. Cristin, you want to go ahead and then Sonia?
Sure. I think everyone shared great advice and resources. I think anecdotally, I love to read. And so I would recommend Rich Dad, Poor Dad. It's a great book about personal investing. I think it was given to me when I was very young. And so I would recommend that to anyone who's thinking about portfolio composition and personal investing more broadly. And I also always recommend venture deals. I think a little bit less focused on angel investing, but just thinking about if you graduate beyond angel investing, what that path to growth looks like. Hopefully, if you do start making angel investments, there will be subsequent rounds of capital that come on. And I think venture deals is written from the perspective of an entrepreneur. So understanding that perspective, I think, is very valuable, knowing that hopefully some of the angel investments you make may continue to grow. So I would recommend those books. I think they're great resources, great tools to kind of give you something to get started and to lay a foundation.
And I'll just add three. So one is many cities have some kind of angel conference every year. So I know San Diego has a San Diego Angel Conference. Seattle has the Seattle Angel Conference. So Google your city angel conference. And this is usually a great way to get started with angel investing. You're basically in these groups of people that together will do the diligence. And then it's like a tournament style where one will ultimately be funded, or sometimes a couple will be funded, but you go every week and you are with other investors, you're asking questions together, you're figuring out. And to me, the beauty of that is like I said, I approach something from the perspective of like, what are the regulatory challenges, maybe some of the operational challenges. But I listen to other investors who have a much greater understanding of a balance sheet and are looking at, customer acquisition costs and like understand marketing challenges, right? And like providing that lens from somebody else who has a different background is really, really helpful. So Angel Conference Start Out is it supports LGBT entrepreneurs, and they put together like, the entrepreneurs that they're supporting. And so that's another set of deals that you can look at. And then the Women's Venture Summit just concluded, and they had a basically national competition to find a bunch of like really amazing female-led startups. And I think most of those startups are currently raising money. So that's another place where if you're just like, hey, I want to see some really cool deals, look up the Women's Venture Summit. They have a website. You can look on LinkedIn, see the deals that are raising money. I think most of them, almost all of them, are going to be really awesome companies. And so they've been vetted by a lot of people, and you can go find their pitches online if you're interested. So those are three potential resources for folks.
Fantastic. Thanks so much for the resources. Let's get into the questions. I know there's been a few in the chat, so I'll get into those. But if you want to raise your hand and come on stage, feel free to raise your hand now. There is a question from Kriti. She says, is there anything similar to TCA in New York City?
I'm sure there is. I would say that, like, I'm 100% confident there is. I would say though that maybe my perspective is this is good if you want to locally meet up with people and learn from them. I do think though that the digital networks, and again, I don't want to plug OnDeck, but I love the OnDeck network. Like I use it for like almost a lot of my betting. So I would say that there's a lot of interesting networks to consider that are digital as well. So I can do some research and maybe send some New York specific ones to Michelle and have her follow up with the group.
Yeah, I do see
Awesome.
that somebody putting 37 Angels, which I know to be a really, really good one. And I think Golden Seeds is national and women. There's also Portfolio, which is another, I don't know if it's only women investors, but like they very much take a diversity lens, and they've got some really cool funds. They do it like by fund. So they're out finding really great deals. So you can invest in each of their funds. And they have one that's right now, I think, on like food and agriculture, and one on underserved founders. So that's a really, really good one too.
Great. And maybe Kat, at the end, when you come on stage, you can tell us about a few more. Joan asks, how can we identify or find a trustworthy community that we can bounce off ideas? Thanks.
I can share, I got involved with OnDeck, and I thought that was actually really impactful. It's a huge community, a lot of founders, very founder friendly. And so that really kind of expanded my network and relationships and gave me another platform or community to engage with. So I can't say enough good things about that. I've had such a positive experience being a part of the OnDeck community. And then the other thing that you might want to consider, I think a lot of alumni groups from different schools also will have angel networks or syndicates. And so I think that also can be a very impactful way to think about investing or tapping into a community, is kind of circling back to your roots. And so I've gotten very involved. I went to school at Notre Dame. In addition to kind of having an angel group, there are quite a few students that are building businesses. They now have an idea week. And so even if you are not necessarily compelled to make an investment, you might still be able to mentor or advise some of these startup companies. And I found that to be a really rewarding experience. So in terms of building a trusted community and potentially giving back to your roots, that might be something also to take a look at.
I mean, I would say, like, just quickly to answer maybe the question as well of like, how do you vet this is all subjective, right? Like, but I really think, like, first of all, you don't want to be the smartest person in the room. Like, you know, you want to feel comfortable asking questions and being vulnerable with your questions. So really giving it a read of like how you feel around this group of people. And I think that's important. And then second, like, you know, as you're testing out, asking for help, I think I would try to understand, like, who are the people in this group, and have they either been operators, or have they actually, do they have a perspective on how they financially model their portfolio if they're coming from that end of the investment spectrum. So I usually like to evaluate on, like, are the people in this network people who have worked at startups before? Have they exited a startup before? Or you know, do they have an experience building businesses? That's how I usually would think about you know, evaluating it.
Perfect. A follow-up question from Joan is, I'm in Austin and we have a central angel group with a few $1,000s every year. Do you think it is a good investment to learn?
I think Austin has a ton. Like, I know a bunch of angel syndicates in Austin. Like, there's just so much happening there. So I would just say, like, vet that community before you decide on the specific one, and ask the questions that Anne was kind of describing, right? Like, what are the background? Are folks former entrepreneurs in general? You know, how long have they been doing angel investing? What kind of deals are they typically seeing and they investing in? Because there's really no shortage of angel groups you can join there. And, you know, think too, like, if you, like in San Diego, we get a lot of life science deals. That's just what's here. I have zero life science background. And so, like, it's very hard for me to vet deals if I just, like, completely don't understand the science. And so if we are going to invest in a deal like that, it's really helpful to me that we have a ton of, like, folks that are doctors or in the medical field who can kind of, like, vet that piece of it. And yes, Samantha, you should move to San Diego. It is the greatest place on earth. I just don't know why people live anywhere else. But so for those particular deals, it's helpful to have, like, that very specific experience. I think, Austin, you've got so many tech deals that if you're a tech founder, you probably get it, but, like, look for the experience that's going to support yours.
I think it's, sorry, Adam, you go.
No, go ahead, Michelle.
I think it's just interesting because someone direct messaged me as you were speaking, before you said the medical thing, said, I'm coming from a medical background, but interested in angel investing. How do I get started? And I think it's cool to see how, no matter what background you come from, you can pull from that background to help your angel investing. And I think we've seen that with Cristin's background in finance and Anne's background in operating. You can pull from your experiences, no matter what they are, to help you make sound investment deals. And sorry, I cut you off.
No, I was just gonna say, you're right. And that's why, if you've never, like, you know, let's say worked for a startup, or you've never really been exposed to that industry, kind of what Sonia is saying, sometimes the investment, to answer your question, is actually to learn the business. Like, sometimes I will do an investment in an industry, like, I'm industry agnostic, but I didn't work heavily in B2B businesses. I mean, a lot of my experience is in consumer technology. So I have a better understanding of how I would evaluate a founder talking through consumer than I would of everything in B2B, but I still have, like, a framework of questions I might ask for B2B. And so me intentionally investing in B2B is also, like, higher risk, but I'm like okay with it, because I want to, like, pay attention to what they're doing and see what works and what doesn't. So you're kind of investing in the experience of learning, if that helps.
Great. Next question is, do you have to meet the institutional investor requirements to be part of a syndicate? From Rachel.
I don't know if I'm the best person to answer this, because every, like, syndicate I've joined on Angel has asked me if I'm accredited, and I don't know what happens if I say no to that. So I don't know if I'm the best, but if you aren't accredited, the companies like Republic and WeFunder will allow you to start investing, and they just limit the amount that you put in, you know, every year, because they don't want you to overinvest in something risky. But does anyone have an answer for the?
I mean, it's fundamentally going to depend on the group you're talking about, but something like a TechNexus Angels definitely requires you to be accredited.
So it's just dependent on the group. So just do your due diligence there. Okay, we only have a few minutes, so I'm going to power through these questions so that we can potentially answer all of them. Curious how you think about the check amount for follow-on investments when you've written, say, a $10,000 check pre-seed or pre-product.
really depends on traction, right? Have they met or exceeded what they said they were going to do? You know, have they needed to pivot and have they pivoted successfully? I think the biggest thing for founders, and to me, like, often I will ask for financials, less because I believe that your financial model is what you're going to like actually do, because I don't believe that, and more to see like, are you at the stage where you can really take in capital because you understand what angels need to see? And so if I get a model that's like, you know, you don't actually know how to model, it's just going to sort of give me a pause. Like, you probably aren't at the stage yet where you're, and like, and at that point, I might recommend that you go to an incubator or accelerator that can like help you with that modeling skill, if I believe in what the company is doing. But fundamentally, it's like, have you been communicating through this time? Do I understand as your investor that like you have gone on this path, and have you brought me along? Have you asked me for advice or connections? Like, probably not me for advice. Like, I may have very little to offer you, but like, have you been like sharing investor updates, right? Have you shown that you're really ready for that next stage of investment? And I think, you know, it takes different companies different amounts of time to get there, right? Like, there are certain rocket ship companies that like move from the A to the B so quickly, and you're just like, wow, you probably don't even need my money anymore. But I think if you're just getting into angel investing and you're at a really early stage, that's probably like, I wouldn't worry about that as much as thinking about like supporting the company to get there, if that makes sense.
Yeah, I second that. I think most of the time, as I've thought about initial angel investments, I find that I am making the investment primarily to learn more so than for expected financial return. And so I think kind of going in with having a very specific perspective and maybe contemplating what follow-on investment could look like. If you're getting in through an angel round, there's going to be dilution in subsequent rounds. And so depending on what your comfort level is for how much you're able to invest, and thinking about capital planning for one or many in that portfolio is definitely something to think about. But also, I think angel investing and kind of getting your feet wet, I think there's a huge amount of learning that comes with that, because you're investing in companies that are private, that have very, very little information that's publicly known. And so you're privy to that information as an investor. And I think that's why, even when I was talking previously, you're able to kind of lean in and potentially help shape and mold the future of that company. So to me, I feel like that's the biggest value that I can ascertain from making an angel investment, is being able to influence the direction of the company. And capital is just a function that enables me to have a seat at the table to do that. So that's also something to think about as it relates to certain angel investments and building a portfolio, is understanding that there will be dilution in further rounds. And when you're evaluating additional capital or putting in additional capital, you know, it can become a lot more capital intensive down the road. So just understanding what your exposure and appetite for additional investments looks like.
Awesome.
Yeah,
I think, oh, sorry.
I was gonna say I agree with both, but I would just like add one quick thing, which is it is, I think someone mentioned this in the chat, like that this is a, you know, it is risky, and we keep repeating that. So I would say it's really important to think about why you want to invest, and if you're doing it just to make like a substantial amount of money, there's other ways to invest in other assets that are likely to have higher return, or on average over like 20 years. And so you have to ask yourself why you want to do it. And I think, like, if I had to give my reason, like I actually love, I think Sonia mentioned this, I love the idea that I have a say as a person who can make something happen in the world, even with a small investment, something I might want to see, or empowering a founder that like clearly wants to be a leader and clearly wants to innovate. And so I like working with people like that. And that's why I'm in this world, not like just because I think it's going to be the asset class that makes me a lot of money.
I'm just going to jump into the last question here before we wrap up. This is really interesting. Alexia said, human bias is very important to me as a female founder investor, which I've experienced the bias firsthand. This is great info for networking and word of mouth. My concern is that networks that operate in silos often become echo chambers and don't help human bias towards the flow. What are the more data-driven sources that you use for your own investment due diligence?
Well, I would say, I'll answer briefly, which is that I love where you're going with having there be data platforms on this, but because I necessarily am not looking at something that's organized. And I would love that because I have a data background. A lot of what I'm doing is like mentally collecting data points on the traits that I think make a successful like contributor to building anything. So I've just done it where I'm talking to a lot of people intentionally and like in my mind, letting my brain process like the data set of like, wow, I'm like really aligned with that model. And I understand that that might present bias. So I'm then kind of actively saying, how can I meet people outside of this universe who are not in this subset of people and like kind of understand how I evaluate that. So I think it's, to me, it's a back and forth. And I didn't mean to answer that cryptically without a data set, but I just meant, to me, it's a circle of like, increase the data points that I'm personally experiencing and then diversify the data points by actively like keeping myself in check with like who I'm listening to and who I'm not.
Ad Astra has a really great training for investors on eliminating bias, and particularly around gender bias. Although I think some of the same things apply to like people of color as an example. So I think it is incumbent on investors to try to seek out ways to like challenge those biases. I think the challenge is that it's very rare that you'll see apples to apples, right? You can sort of notice a pattern. And in fact, that's some of what we're doing at TCA is like tracking the pipeline so we can understand where various founders come through and how we look at different companies with different types of founders. And I think what I've learned from that data is there is a bias toward thinking that like women founders, for example, are earlier stage than a comparable male founder. But it's sort of, it's not fair necessarily to say that somebody's at the same stage, right? Because they've raised different amounts of money or the idea is in a different place or they have different experiences, right? There's all these things feeding into this package. And so I think it does come down to, you know, if you're joining a group or you're not joining a group, making sure, like Anne said, that you're checking your own biases around what you're hearing from founders. And then there's a, Dana Conzi has done some incredible work around the kinds of questions that investors ask founders, and just making sure that you're focused on the like promotion questions, as she terms it, and doing the same for founders regardless of gender or race.
I just shared an article that I read. It's a little stale. I think it's from last year from HBR talking about gender bias as it comes to pitches. And so there are actually some firms that will remove the pitch from the process completely and will use exclusively metrics to evaluate businesses and to make investment decisions. There are also some other groups that will allocate a certain % of their portfolio towards, you know, gender diversification. And so, you know, I think acknowledging that bias is just an intrinsic part of this process. Unfortunately, this was a frustrating article for me to read, that when women pitch their businesses, they're not getting capital in an equal way to men. That frustrated me, because I think if a female is building a business, she is the face of the business, and that should hopefully equate to receiving capital. So I don't know, I thought that this was a fascinating article, definitely worth a read. And I think so it kind of makes me feel that much stronger about trying to connect, you know, female VCs to female entrepreneurs and connecting capital where it may be more equitably distributed. So it's a good read. Definitely take a peek at that. It's pretty on the nose talking about gender bias in early stage investing.
Thank you to you all for sharing. Before we get a final word from all of our panelists, I'd love to say a big thank you to our partners. I know Breen from the 4th floor is here today, so I'd love for you to share a little bit more about the 4th floor and how you support women in investing.
Oh, well, thank you so much, Michelle. And thank you to all the panelists. This is really just a wonderful, fascinating discussion. And I think like really on point and really in line with everything we're doing at the 4th floor. So my name is Breen Sullivan. And for those of you who are not familiar with the 4th floor, I do see a lot of 4th floor members in the audience here. We are a new kind of tech-enabled membership community, and we're bringing together women entrepreneurs, board candidates, and investors. And the mission at the 4th floor is actually to increase the number of women on boards and also on cap tables of women-led startups. And we're doing this as a way to really initiate and advance for-profit board careers for women and also investment careers for women. And then, you know, also the effect of this is to empower women entrepreneurs and just really get more capital, access to capital to those entrepreneurs. So we're achieving all of this by bringing these differentiated networks together, and we have a board seat exchange. We also have a Backroom investment club, which is going into beta this month. We're really excited about it. It's actually in line with a lot of what you guys have been discussing in this panel, of really providing an on-ramp for women who want to start their for-profit board careers, but also want to write a check while they're doing it so that they can ensure a return on their investment. So they have a seat at the table and they have a say. There's no reason why you can't marry those two things together, and it can be really profitable and really rewarding. So that's a big thing that's happening in our Backroom Investment Club. We're also welcoming funds. So women who are fund managers, who are professional investors, you're welcome as well. It's a virtuous circle. It's a value creation circle model. So it's working well. In the fourth floor in our board seat exchange, we're going to apply this in our investment club. So it touches on a lot of what you guys are, what you've been discussing today. If you are not a member and you're interested, please consider applying. So I think my co-founder, Kat, is here. She's putting the links in the chat. Apply to join us if you're a founder, if you're someone who's interested in starting your for-profit board career or getting involved with angel investing in a very low stakes, extremely inexpensive way to do it, or if you're a professional investor and you want to test out this virtuous circle and see how it can benefit you in terms of access to deal flow and also potential LPs. So that's what I have to say. Thank you.
Awesome. Thank you so much, Breen. I'm also part of the fourth floor. Love the founders are awesome. Breen and Kat are here today. So definitely check them out. We have another partner, Start Out. Sarah, I don't know if you're here, but if you do want to come on, give me a shout. Otherwise, to the panelists, I would love for you all to just tell if you have any final words or how people can reach you. Sonia, if you want to go ahead. And if you want to share anything about Start Out, that'd be great as well.
Sure. So Start Out is a really fantastic resource for LGBT entrepreneurs. I was a member as a founder and now as an investor. And it's such a cool group of people. So I don't know if Sarah is here. She's the, I think, executive director, but check out their website, startout.com. I don't know, I Google things rather than
startout.org. Startout.org.
There you go. And then anything to add? I mean, I think, I don't know if it seems scary before you do angel investing, right? Like how do I get involved? How do I do this? And it's like, once you actually do it, it's very simple. Thank you for posting the link. And somewhat addictive. And frankly, I've spent way more on it than I expected to. It takes over a lot more of my life than I expected to in a completely wonderful way. So I would say, yeah, if you're thinking about doing it, go to some of the resources we talked about, like Republic or WeFunder, put in, give yourself a budget of what you can afford to completely lose and just see how it feels and develop that expertise with it. And then over time, it will just become a part of your assets that you have or a part of the community serving that you do. And if you want to reach me, LinkedIn is probably the best way to do that. And I can post my LinkedIn.
Definitely. And do you want to go ahead?
Yeah, the quick thing I was going to say is that, it's your money. So it's your investment. So again, you get to choose what you want to put into the world. And as Cristin said, you get to, you should want to feel like you have a say as an owner of that company and learn and partner with those founders. So that's the first thing. And then the second is that you can actually, as in your evaluation, ask the founder whether they care about who's on their cap table and if they're intentionally trying to diversify it. And it's one of my questions that I ask to better understand what type of leader they are. So it's something that you can do as well. And then LinkedIn again is probably the best way to reach me as well. Thanks again for having me.
Cristin, go ahead.
I think just to close, it gives me a lot of hope and excitement that so many women and wonderful people joined the panel and listened in today. I love to be able to have conversations like this, and that's a big part of why I work in venture. I love talking to startup founders and seeing if I can help further their vision, and capital is just a small way that we can help accelerate that growth. So I'm really honored to have been on this panel with Sonia and Anne today, and Michelle for being a wonderful moderator. And please feel free to connect with me on LinkedIn or on Twitter. I again think the hardest part about investing might be just getting started. So So if I can help and kind of further that conversation in any way, please do feel free to reach out and connect with me.
Thank you again to all of our panelists and all of our partners. One other partner I want to shout out, she couldn't be here today, but Naimisha is the founder of Products by Women. They're a diverse global tech community making skill-based jobs, mentorship, and professional development more accessible for women. All of the partners here today I've worked with extensively and are all amazing, so highly recommend you check them out. And please add all of our amazing panelists on LinkedIn and tell them how great of a job they did. I know we were a little bit over time. Sorry about that. There will be a recording. I know some people had to drop off early. I'll be sending off the recording after the panel today or tomorrow. So thank you again to everyone for coming. Thank you to our panelists and hope you have a good day.
Thank you all.
Thanks.